From one Chris to another, I'm now joined by Chris Zuehlke, Global Head of Cumberland, the crypto trading arm of DRW. And we're going to be looking at the definition of an asset class, whether it's appropriate to crypto, and also some of the innovations on the trading side that it's brought to the market. Chris, thanks for your time today.
Yeah, my pleasure to be here. Thanks for having me.
The topic we have to discuss is crypto as an asset class. So I guess let's begin with that. Is crypto an asset class at all?
Well, it's an interesting question. I think it may be one of the first times that we've seen in markets an asset class actually rise out of a series of assets that share common DNA and common technical infrastructure, but perhaps not the same types of variables that you would look at when you're defining other asset classes. For instance, Bitcoin, when you actually think about it and what it does, is fundamentally very different than L1 smart contract protocol like Ethereum or Solana or Avalanche, so to speak, and is very different than a stable coin and is very different than, say, a DEX utility token. So despite the fact that there is such differences in the underlying use case and the utility of these assets, we found them to be defined as a similar asset class because you need the same rails to trade these things. You need to be able to manage the wallet infrastructure and bilateral settlement. You need to manage 24/7 trading operations. You need to understand the regulatory landscape as it shifts constantly globally. And as a result, it helps to think about these as a common asset class. But how different is Bitcoin from, say, a Web3 technology like Helium? Very, very, very different, except that they share common DNA and common technical innovations.
So it's almost like crypto is an enabler of new technology in that respect. And does that matter when you think about it? People talk about trading Ethereum in the same way they talk about Ether. Does it matter that people potentially don't fully understand what the underlying is and the different applications?
Well, I mean, I think everyone should understand the assets that you're trading, but I think where a lot of people start is some of that common DNA, right? So what is a distributed ledger? What is decentralized trustless access to transaction confirmations? These kinds of things are the sorts of innovations and technologies that once they're let out of the box, they're not going to go back in. They're just too transformative and powerful. So I think when people are talking about the different asset classes in the space, that they kind of fall on those commonalities. And then they kind of build up their knowledge from there and start to focus on the various different use cases that are available to them in the crypto space. And as a result, I think we end up having a much more vibrant market. It's not one that is just betting on gold as a store of value and an inflationary hedge. It's people that are looking to participate in the utility of the smart contracts layers. It's people looking for improved remittances and access to financial services within the stablecoin space. So what ends up happening is you have many, many different industries that all have different value propositions, but more importantly, motivating factors, trying to move the crypto ecosystem forward as a whole, despite the fact that they might not have the same use cases right now. So I think to your point, you're absolutely right. It's this common technology and innovation that's enabling this asset class to emerge. And then as people start to catch up and those common infrastructure and ecosystem components are built, we'll probably start to see some amount of divergence in how people think about these assets, but we're still getting there.
Interesting. I guess you throw into the mix around that digital securities. So a traditional firm will list with potentially a share of revenue rather than an equity component to the fundraise. How do you see those tokens fitting in, or those securities fitting into the overall ecosystem and liquidity building in them?
Yeah, I think it's a very broad question, and it's one we spend a lot of time thinking of. I think our firm strongly believes that the tokenization of assets, regardless of if they're a security or a commodity or debt issuance or interest rate product, is bound to happen. The operational efficiencies associated with digital assets are profound. And they're profound all the way down at the clearing layer. They're profound at the DVP layer. They're profound at the day-to-day use case layer. So I think it's just a matter of time to see traditional securities, to see debt issuance, to see these sorts of things end up on chain and in a big way. The other interesting innovation that this will allow is the fractionization of assets, which is something that people are constantly talking about. Maybe you can't justify a full share of ownership in a large real estate project, but you could buy 1,000th of it if it was tokenized. So these sorts of things, while they're still waiting to gain mass adoption, I think are inevitable. And in order to prepare for that, we at DRW and Cumberland are thinking about how we could take the experiences that we've had in traditional crypto assets, the concept of bilateral settlement and managing wallets and custody and those sorts of things, on-chain analytics for AML and KYC, and thinking about how that projects into the tokenization of traditional assets over the course of the next few years, which kind of gets to the point that this isn't so much just an asset class. It's the enabling technology to effectively make markets more efficient once they're adopted. And I think that's what we're really excited about, is to be part of that process.
Interesting. We've talked a lot today on the panel about some of the market structure challenges that crypto poses, especially as this question as to whether it can migrate into the traditional world of traditional assets is pertinent. How have you, as Cumberland, coming from a traditional trading environment, adapted to things like the auto closeout, the 24/7 market?
Yeah, well, so the 24/7 market, that was, I think, something that seemed daunting originally. And I know that people are asking about the ramifications of 24/7 as a result of some of the CFTC and FTX comment letter conversations. But what we found was that if you build for 24/7 day one, it's not a scary thing. It's not a complicated thing. And as a matter of fact, what I found is when we were hiring for, let's call it 23/5 markets, you kind of hire with this premise of I'll always be there, so I can help if XYZ happens. Once you move to 24/7, you no longer have this idea that no matter what happens, everyone will always be there and available. You start to hire for people that are much more autonomous and much more capable of operating a business, kind of without that like intraday constant check-in to potentially like higher level leadership. So while I think there's some consternation about 24/7, when you approach it from a first principle and you build it with 24/7 in mind, not only is it easier, but it actually affords you a lot of risk mitigating operations that you wouldn't otherwise have. For instance, what I think is the single most operationally risky moment in the market is the cold open on Sunday nights when the futures exchanges move from closed to open. Systems go from being off to being on, and that's oftentimes where a lot of the issues will happen, or potentially volatility spikes will happen because the market was closed over the weekend. That doesn't happen in crypto. We're able to manage our risks continuously. We're able to manage our operations continuously. So as a result, that kind of like the stress and the volatility around moments in time is spread out a little bit more effectively. It's also been very helpful during the Russia-Ukraine war, where we were able to manage our risk 24/7 over the weekend, despite the uncertainty in other markets. So while I think there's some concerns there, once you realize the power it offers you, I think people will become much more confident in it. Now, I do think to the point about 24/7 settlement, that's a big problem that I think the industry is going to have to address. Any organization that is crypto first has built in the concept of stablecoin settlement on a 24/7 basis. They've also built into kind of the nouveau banks that offer 24/7 wire services within their networks. And I think in order to be prepared for this, some of these more traditional financial institutions are going to have to consider some of these technologies. But I don't think that's a reason to shy away from it. As a matter of fact, I think we've struggled in the past to find innovations in traditional markets because of the first do no harm principle, and it stops us from experimenting. But we got this great experiment that is crypto that has the ultimate sandbox for financial innovation that I feel like we can learn a few lessons from.
Interesting. And on the subject of that development of the traditional world, and you've worked a lot with ISDA, you're helping to build an institutional framework around crypto trading, in particular on the derivatives and the options side. Can you just talk a little bit about the ongoing initiatives that you have in that respect?
It really pulls from our experience doing something similar in traditional markets. We were very involved in the migration from the pits to the screens, very involved in Dodd-Frank and Reg AT proposals, equity market structure proposals, treasury market structure proposals. And at the end of the day, they're all very similar conversations. Everyone has the best interest of the market in mind. They just have a different opinion on how to get to that best solution. So what we've done is similar to our experiences with FIA and PTG and FINRA and all the other traditional organizations, we're applying the same approach to crypto. We're members of a handful of different industry groups, BA, PTG, been involved with Atom historically and a handful of others. And you mentioned ISDA. We recently became a member of ISDA because despite the fact that we did not have the type of business that would justify as the membership for TradFi. Now that we are trying to usher in kind of the right way to participate in bilateral markets for the industry, we felt it was important for us to kind of plant that flag and say, we're going to start from a kind of ISDA-centric perspective, a CFTC regulated perspective. And so as a result, we're leading by action, we're leading by principle, and I think we're leading with our voice as well inside of these industry groups.
Interesting. If there's one thing you would change from, we're just up against time now, but if there's one thing or what's top of your wish list in terms of what needs to change in the industry in order for you to realize its true potential?
You know, it's crypto is interesting right now in that it's not a zero-sum game like most traditional markets. It's still very much in a building phase, and it's very much not just in a building of the asset class, but a building of the infrastructure phase. And what I found is that the more that institutions work together to define what they think is the right long-term solution based on the lessons from the past, but also the innovations we've gotten out of the crypto world, we're able to get to some pretty reasonable conclusions and work towards that path. And you know, that's kind of very different than when it was more of a kind of zero-sum game and everyone was trying to be the best in a specific vertical. I think it's possible for those same organizations to collaborate very extensively to continue to move the infrastructure and ecosystem ball forward in a way that benefits everyone. So I think it's important for industry participants to continue to work together, to lend their voice and their expertise to regulators, and try to set an example of what this market could look like with the support of the regulators and other technological innovation behind it.
Fantastic. Chris, it's been a fascinating chat. Thank you ever so much for your time. I'll leave you to your day. Thank you.
Absolutely. Thank you. Take it easy.